Hey everybody, Dave here, Hidden Freedom. In today's video, we're going to go through the dividend portfolio update for the month of April. Look at all the buys, the sells, the dividend increases, and talk about some other things as well. Today was a wild day in the market, down $19,000 just for the portfolio. Yesterday was up 18, so it is what it is. Also, days retired, look at that. 20 days I've been in a retirement, and it's been wonderful. And this number is going by just as fast as it was counting down to retirement as well. If you're interested in seeing future videos like this, please go ahead and like and subscribe and set that bell notification so you get notified when I set a new video out. Let's go ahead and get started. We are looking at agenda for today, month of April. This is obviously in May, but this is the April update. We just saw dividend amount there. And pretty much, well, it's coming back a little bit just because the market's been going down since the last update. I think the last update I was up like 40K on the portfolio. Now we're pretty much flat on the portfolio. Yeah, minus 500 bucks. So I am trying to take advantage by putting some money in from other investments that are getting paid back. Trying to live off of cash right now until I go hike the Appalachian Trail here in about 20 days or so. So let's take a look at the overview. The overview here. So looking at the taxable account here, that is down to $675,000. Dividend income, I think actually has dropped a little bit. I think it's about 38,000. And I think that has to do with mostly those income ETFs because when those drop, the income actually comes down just a little bit as well. But it's close enough. We got the sold 401k there, which is all in the queues right now, down $11,000. And I was selling covered calls, and then I just stopped because I don't want to get caught where if the market goes up, 10% in a month, I don't want to be caught where I can't get out of it. So just waiting on those. And you got the Schwab IRA. That money is most likely, it's cash right now. It's most likely going to go into possibly into JEPI and also into SPY puts. So hopefully I can get down about 9% down on the SPY. And the SPY is already down, about 13%. So if we can get down another 7 to 9%, then I think that'd be a good buy, getting into a bunch of contracts on the SPY. HSA is going to end up being, it's either going to be JEPI or it's going to be XYLD. I haven't made a decision there. All right, so the dividend portfolio brings in about, like I said, about $38,000. We're showing 41 here, $3,400 per month in income. Obviously, this is just the stock portion of my income. I do have income that comes in from the real estate notes as well, roughly about $1,700 just on the taxable side there, another $1,100 on the actual retirement side as well. So, and that all gets, goes back into the portfolio right now. It goes back in the portfolio because I am living off this cash right now while I'm in early retirement and go hike the Appalachian Trail. Let's bring it back to the agenda here. And so we looked at the overview here. Housekeeping, all day spreadsheets featured in this video are available. Because I retired in April 15th, and this is the first update since then, I'm going to do a special discount here. HF Fire 2022. And that's the biggest discount I've ever run on these spreadsheets. I want to get them out as to many people as possible. HF Fire 2022 there's only 100 of those available. So the first 100 people that use that discount code will get the discount. So see first pin comment or description. Brings down here to 3B. We got roughly 419,000 still left in real estate notes. And like I said, when those get paid back, they're going into the stock portfolio, because I'm trying to reduce that interest income because all of this is interest income, and I'm trying to get more favorable qualified dividends to reduce my taxable liability. Pay your fair share, Dave. So if you want to see this video on the real estate notes, take a look at that video on the top right over here. Please support my second channel, Hidden Off Grid, which I made several videos out here, and I continue to make videos out there. The most recent videos there, first 3 things you need to do in early retirement Did that last week. Take a look at that video. And it's the first things I needed to take care of in early retirement. Going forward, I'll be making more videos on this channel because I will be hiking the Appalachian Trail, and all those videos will be going on this channel. So if you want to follow that journey, I'll talk about finance and stuff as well on this channel that I don't really share on the main channel. And when I get back from the Appalachian Trail, I'll be doing portfolio updates again on the main channel. So let's look at that back at the agenda here. So let's take a look at the dividend portfolio here. Let's look at 4A, the dividend increases. So let's take a look here. I think there's been a few dividend increases, but at the same time, I think there's still some that are outstanding that have not been updated yet that I need to update. So we got one here on Southern, and we got a dividend increase of 3%, a little over 3% there, which is actually in line to the 1, 3, and 5 and 10-year CAGR. So that's pretty good for Southern there. Utilities have been on fire as well, just because everybody's trying to go into a little bit more defensive plays. So let's go ahead and clear that flag there, 2.72. Clear that flag. Let's scroll down a bit here. We got three more. We got one in here in Procter & Gamble. Procter & Gamble gave us a 5% increase, and that is actually a little bit lower than what we expect, but it's right in line at the 5-year and the 10-year, so that's pretty good. And we got a Dividend King there. Let's go ahead and clear that flag there with some $3.48 up to $3.65. So 365, and it's a 6. All right, clear that flag there. Let's take a look at the Johnson & Johnson here. 6.6% increase on a Johnson & Johnson. And that is actually bigger than everything, all the way going out to 10 years. So 1 year, 3 year, 5 year, and the 10-year, it's bigger than every one of those. So congratulations to the Johnson & Johnson holders. Let's go ahead and clear that flag there. So $4.52 there. I haven't made a decision what I'm going to do with my Johnson & Johnson shares. I know that they'll be doing that spinoff soon, and I do have $9,000 in Johnson & Johnson. I'm not really worried about it, but I'm not happy about it either. So I'm just not happy that they're spinning off what, in my opinion, is the best section or the best, area of Johnson & Johnson. So I'll cross that bridge when the time comes. We got Apple here is the next one, and Apple, we gave us a 4.55% increase. What the heck is Apple doing here? They're not even, their 1 year, their 3 year, and their 5 year. It's not even in line with that. They got billions of dollars sitting on the sideline, and they can give us a higher dividend increase than that. They should be able to get us a 15 to 20%. Their yield is terrible. Look at this here. So their yield is basically 0.6%. They could afford to triple that. I just don't know why they don't. They're trying to be a growth company, and they're really not anymore. I don't know if they are or not, but all right, let's go ahead and clear that flag here, 0.92. So that takes care of all of the dividend increases for the month of April. Like I said, there actually might be another one in there. It just didn't catch at the time because I believe that 3M increased as well, but we'll probably catch that in next month. All right, we're looking at the sells for the month of April. Just 2 sells here. I took a little bit of profits in KMB, just 8 shares, $1,100 there. When they had that 10% increase they had just a few weeks back. And I just decided to sell out a little bit of the staples there and redeploy. I think that capital, if I'm not mistaken, all went into T. I also sold the first day there, WBD, so Warner Brothers Discovery, and just sold out of the shares, the 20 shares that I was gifted, and then redeposited or reinvested that $515 back into T as well. All right, we're looking at the buys here for the month of April. So SCHD, I bought 23 shares of SCHD there, $1,792. Bought 5 shares of QQQ, $1,729 there. We bought some T, 82 shares there, $1,600. Like I said, the KMB that I sold out of, just a little bit of shares there, kind of rendered a little bit of profits there, and the WBD all went into T, just building that position back up a bit. And I also bought 1 share of DIVO at $37, probably just because my account had the amount of money to fund 1 share, so why not buy 1 share of DIVO? That total buys for the month of April, it comes out to $5,159. Here we're looking at the stock allocation where my portfolio sits at this time, and this is just individual stocks. This is not including the ETFs that are in my portfolio. Got a lot of ETFs down at the bottom over here. SCHD, NUSI, QQQ, we got DIVO and JEPI, and I think SPY is at the top up there, even though I'll be building that out slowly. Take a look at the allocation. Consumer staples there at 24%, utilities 5%, financials 6%, we got healthcare at 12%, materials at 2.6%, real estate 3.3%, energy at 5.6%, industrial 7.8%, consumer discretionary at 12.5%, communication services at 3.3%, information technology at 17%. This is the S&P 500 over here. I try to keep it very similar to that. So I did sell out of a little bit of consumer staples, went a little bit more communication services, but some still things here are a little bit overweighted, like utilities, but I'm okay with that. They are defensive. In energy, I'm still a little bit overweight in, but I still think energy is okay. Real estate is probably a little bit overweighted as well. It's just realty income over there. Everything else seems to be okay. Probably a little underweight in financials, especially with interest rates coming up a bit. But I'm pretty happy with where things stand at this time. That brings us to the dividends received for the month of April, and this was another record-breaking month. And I do think that this is the last record-breaking month for a while. And I just say that because the market's going down and a lot of these income ETFs decrease their dividends on the way down a little bit. But JEPI here, with the biggest month I've ever had from JEPI, I think it was 58 cents coming out of JEPI, paid me $2,473 right there. And even in May, May is still another pretty big JEPI payout. A little bit bigger than normal. So we had another dividend payout there with Kimberly-Clark, $50 there. WBD and $27 there. I can't remember if that was a dividend or if that was cash in lieu of. I think that was in cash in lieu of, if I'm not mistaken. But we got realty income, that's a monthly payer, $12 there. We got NUSI, $297. Drip's turned off on that at this time. Drip is turned on everything else that can be dripped right now. QQQ there had a $99 payout in QQQ. And then we have DIVO, it's another monthly pair there, $1,004. For grand total of those 7 dividends received for the month of April, $3,965.26. A record-breaking month for me again. The next thing we're going to do here is we're going to write all those dividends, those 7 dividends received for the month of April across the spreadsheet here in Google Sheets. So we're going to fill in that line there. In order to do that, we're going to run a script to make my job a little bit easier. So let's go and look at the dividend charts. We got the dividend meter over there. Bring up the script. Let's go and kick off that script there. All right. The script is finished and we saw the dividend meter go up. So we're up to $14,000 for 2022 so far. Before we finish looking at the rest of these metrics, take a look to make sure that dividends received got updated there. And so we got QQQ $99, we got O, we got Kimberly-Clark there. We have DIVO, we got NUSI, we got JEPI. And that is it. So we have 39, 38, 25. So that it looks good there. Go back to the dividend charts there, scrolling down. We got dividends by month here. So we just eked out the month of March by a little less than $100. And so that makes April the largest month ever for me. And it looks like we're on pace to probably maybe beat out the quarter of Q1 as well. So 2022 is starting to look pretty good there. Scroll down here. Here's the dividends by quarter here. 2022, so we got Q1 there, $10,469, and we're just starting the first month here for Q2, so we're already at jump, so we pretty much kind of almost triple that maybe, and that should beat out Q1 hopefully for 2022 as well. And we scroll down here, here's the dividends by year, so we're already up to $14,000 for 2022, and all of last year we had $25,000, $765. We got 2020 there, which I kind of started the dividend portfolio in early 2020, so that was kind of the first year of the portfolio. And then this year we should be up around $40,000 is my guess. I could do a snafu and get into some JEPI in that retirement account and push the dividends probably over to $50,000 to $60,000 this year, but I haven't made a decision on that yet. All right, we looked at the dividend increases, the sells, the buys, the adds. We looked at the stock allocations, look at the dividends received for the April. We ran the script. We looked at the dividend metrics. Let's take a look at the options income right quick here. All right, we're looking at the options report and looks like we're up $1,193 for April. So I did eke out a gain in April. So January was minus 13, February was plus 10,000, March was minus $867, and then April we eked out almost a $1,200 gain. May we're already up to 46, but down for the year at 24.42. I also did eke out a little bit of cover call gains here against the QQQ in my Soul for 1K. So I realized $621 on those covered calls. And like I said, the Qs have dropped considerably. I think my average is 359 right now. So I'm not going to be selling any covered calls until that comes back up. And I'll continue to lower my average by buying more shares as well. And as soon as that comes up, I'll sell some more covered calls. So not a bad month for the options income. Matter of fact, these are actually swapped. This should be up there and that should be down there, 621. Let's move those down there, 621. All right, yeah, so the Interactive Broker CSP account, 1193, and then 621 for the what I call cover call CSP account. It's the Solar 401k, but I also wheel the QQQ in that account. So let's take a look at the Schwab positions next year. All right, we're logged in my Schwab account. Scroll down here. Let's take a look at these positions. So all these positions should jive pretty much with what you see in the Google Sheets, which I showed at the beginning of the video. And this was a rough day, so it is what it is. This is the overall return in those positions. There's only really two positions I'm down in, and that's T and Kimberly-Clark. So all the rest of the positions are up because most of them got bought into in 2020, especially Apple. That's why it's up 165%. Scroll down here. Here is all of the income ETFs down here. We got DIVO, SHD, JEPI, NUSI, and QQQ. Some of those are not income ETFs, but there is the general gain loss for those positions. And then we don't have any options on at this time, no cover calls or any CSPs in my retirement account. Last thing we'll look at here is we'll look at the projected income for the month of May. So here is May right here. They're projecting 3267. So actually it should be about $3,300 because we've already received a little bit of dividends already. So it looks like that is going to be a lot smaller month than what we had in April. April was almost $4,000, and even March was pretty big there at $3,800. And I think that really has to do with the income ETFs going down in value. So they kind of base their payout based off the value of the ETF. So I think that's the reason why these keep dropping. It's still showing me at $3,500 on average here, but that's not right. If we do the next 12 months, it drops down to $3,400, which is kind of odd because I looked at this the other day and it was down to $37,000. So that's actually pretty much going what we have over here as well, right? I show me at 41,000, and that's actually slightly off just because the HSA is not included in the Schwab account. But it's pretty close. I just know that when the income ETFs go down, and I bet you that's going to go down today because we had a big market down day, and I bet you that readjusts tonight back down to like $3,200. It's just my guess. So looks like we're pretty. I'm still happy with that. I don't mind the couple $1,000 fluctuation there. I know a lot of people probably would be upset at that, but that's just the way the income ETFs act, and you're not going to be able to get away with that if you're in income ETFs. You want to get away from that, then go invest in all the single individual stocks up here, or get an SCHD or a traditional dividend ETF or something like that. So that rounds out this update. If you have any comments, questions, concerns, leave a comment down below. Until next time, we'll see you in the next video. Thanks for watching.